another exciting time. We talk about a world economy. My name is Blyden Ukem. In world economy today, a global stocks rise. EU readies a single 93 billion euros US trade retaliation package. Japan's Prime Minister denies he plans to quit after election dropping. Plus, Nigeria GDP grows by 3.13% in the first quarter of 2023. In world economy today, our global stocks rise. Global stocks were in the green today, buoyed by improved global sentiment after a US-Japan trade deal into the US and opened its market to key American goods. In Europe, the Stock 50 added 1% and the Stock 600 gained 0.9%, while in Asia, the Nikkei 225 saw 3.5%. In the US, futures also pointed to gains at the open. And now let's look at global stocks market, what the indices are and the impact of these tariffs on the global stock market this morning. A global stock market indicates US stocks, US 500 at 6,335 index points, are gaining 26.12 points this afternoon, a 0.41% appreciation. Meanwhile, US 30, another US stock also on the positive amid Donald Trump's tariff. Meanwhile, JP225 Japanese stock also positive. The bulk of global stocks are doing well. IT40 Italian stock are gaining 501 basis points. ES35 Spanish stock market also gaining 106 points. ASX 200 gaining. Shanghai stocks no significant change in China, and Sensex gaining 540 points this morning. And now to top companies stock market around the world. Let's look at the top company stock market also around the world and their performances this afternoon. First, we start with Apple, as Apple's stock has a price level of $215 US, gaining 0.8 points this morning, a change of 0.37%. Tesla falling this afternoon, rather, a 1.06 point drop at $331 US per share. Microsoft at $506 US per share, gaining 0.21 points. Amazon on the positive. Meta, Nvidia, and Visa all gaining this afternoon. On the stocks market, global company stocks, the JP Morgan positive, Intel are positive this morning, ExxonMobil are gaining 0.37 points, Alphabet are gaining 1.24 points, Goldman Sachs are dropping 5.4 points this afternoon. Meanwhile, the EU is ready, or the readies a single 93 billion euros US trade retaliation package. The EU will merge two packages of retaliation measures against the US tariff into a single one that will be ready to use if trade negotiations with Trump administration go sour, a European Commission spokesperson said. To make countermeasures clearer, simpler and stronger, the EU will merge lists 1 and 2 into a single list, the bloc's spokesperson for trade, Olaf Geith, told journalists. The first list is currently paused until August 6th, and the second awaits a vote by the EU's 27 member countries. The combined list would target 93 billion euros of US imports into the EU, including bourbon, airplanes, and soybeans. The first dates back to Trump's steel and aluminum tariff from March, with the second one only recently finalized. Gill said the combined list would enter into force on August 7th, though the Commission can suspend the measures for longer. The move comes as negotiations have faltered in recent weeks after President Donald Trump threatened to hit EU with 30% tariff if the two sides don't reach a deal by August 1st. In Japan, Japan's Prime Minister denies he plans to quit after election dropping. Japan's Prime Minister Shigeru Ishiba today denied he had decided to step down. That comes after a source close to the leader and media report has said he planned to announce his resignation following a recent election defeat in the government's upper house. When asked about the reports at his party's headquarters, the embattled leader said, and I quote, "I have never made such a statement. The facts reported in the media are completely unfounded." The reports came as Toshiba announced a long-sought trade deal with the U.S. President Donald Trump on Tuesday. That deal lowers tariffs on imports of Japanese autos and space, Tokyo punishing new levies on other goods. I will go on a quick break, and when we're back, the conversation continues still on Worldview, looking at indices in Indonesia and why Indonesia is seeking to drop tariffs and non-tariff barriers on the U.S. trade deals. Don't go anywhere. Welcome back. It's World Economy. Looking at tariff deals and now to Indonesia. Indonesia has agreed to eliminate tariffs on over 99% of U.S. goods and remove all non-tariff barriers facing American firms, while the U.S. will reduce its threatened tariff on Indonesian products to 19% from 32%, both countries announced on Tuesday. A joint statement in White House Facts, the fact sheet outlined the framework with a final deal expected in the coming weeks. Jakarta will also scrap planned tariffs on internet data flows and support the WTO's e-commerce moratorium. Other key commitments include a drop in pre-shipment inspections that hindered U.S. farm exports, recognizing U.S. vehicle safety standards, and lifting export restriction on critical minerals. Indonesia will remove local content rules for such products and ease licensing barriers on U.S. remanufactured goods. Additionally, it will join the Global Forum on Steel Excess Capacity and address global oversupply issues in the steel sector. Meanwhile, India and UK to sign landmark trade deal as U.S. tariffs stall. India and the UK are set to sign a free trade agreement on Thursday during Prime Minister Modi's visit to Britain, according to reports. Under the deal, India will reduce tariff on British whiskey, cars, and certain food items, while the UK will grant duty-free access to Indian textiles and electric vehicles. Finalized in May after 3 years of on and off talks, the pact aims to boost bilateral trade by easing market access and eliminating key barriers. Trade Minister Piyush Goyal will join Modi for the signing. Modi, on his fourth UK visit since 2014, will also meet Prime Minister Keir Starmer and business leaders to discuss trade, energy, security, and more. Bilateral trade hit $55 billion in 2023-2024. Meanwhile, prospects for a US-India interim trade deal are fading ahead of Washington's August 1st deadline, with talks stalled over tariff on agricultural and dairy goods. And now to the commodities at WTI crude falls for fourth session. WTI crude oil futures fell below $65 per barrel today, extending losses for the fourth session as markets awaited U.S. inventory data. The American Petroleum Institute reported a slight drop in crude stocks last week, while distillate inventories rose. Investors also focused on trade talks between the U.S. and key partners after President Trump announced deals with Japan and the Philippines. Treasury Secretary Scott Bessent said he'll discuss extending the trade truce with China in Stockholm next week, possibly addressing China's purchases of sanctioned oil from Russia and Iran. Prices remain under pressure amid fears that Trump's tariff moves could weaken demand even as OPEC Plus increase output. And now to the commodity market first. Let's look at the different context of the commodity market and what the price level is this afternoon the commodity market. It begins with the price of U.S. crude, WTI crude, at $64 per barrel, falling by 0.457 points amid all the tariff concerns in the world. Meanwhile, Brent, Nigeria's price benchmark, price level stands at $68 per barrel, falling 0.484 points this morning. Negative 0.71%. Natural gas dropping negative 1.47%. Gasoline also falling this morning. Let's look at further commodities and what the prices are. Some metal commodities and agricultural commodities here, as copper price stands at 5.7 US dollars per pound, and copper price gaining 0.0541 points, 0.94% appreciation. Soybeans at 1,017 US dollars per bushel, gaining 7.29 points this morning. Wheat price at 546 US dollars per bushel, falling by 2.52 points. Coal price gaining 0.25 points, steel falling by 25 points, and TTF gas gaining 0.23 points. And now let's look at the world's healthy diet on affordability. The World Health Organization has links on healthy diet to cardiovascular disease, cancer, and global deaths. Thus, it is crucial to address countries with a high number and percentage of their population unable to afford nutritious food. In 2022, India accounted for 28% of the global total of people unable to afford a healthy diet, leading the top 10 countries with 792.8 million individuals. This means 55.6% of India's population face the dietary challenge. And China ranked second, making up 7.4% of the global total with 208.1 million people, indicating that 14.6% of its population, as you can see, could not afford such a diet. Nigeria accounted for 6.2% of the global total with 175.6 million people, with a 2022 population of approximately 237 million. It means the massive 78.7% of Nigeria's population, the populace could not afford healthy food. A comparison of these figures reveals that a high number does not always translate to a high percentage of the population facing this issue. For instance, although India had the largest number of 792.8 million, 55.6% of its population could not afford a healthy diet, while Nigeria, with 175.6 million people impacted, saw a higher proportion of 78.7% of its population facing this challenge. And now let's look at another statistical indication, as UAE stands out with 88% of its population being immigrants. At the top of the list you're about to see of countries with a high immigrant population, UAE stands out with 8 immigrants, a clear reflection of a country's heavy dependence on foreign labor to drive its economy. Similarly, Qatar, Kuwait, and Bahrain show immigrant shares above 50%, cementing the Middle East's dominance in global immigrant concentration. These nations have built their infrastructure and economies on the backs of expatriate workers, especially in sectors like oil, construction, and services. Interestingly, Gabon is the only African country in this regard, the African country to feature among the top 20, with immigrants making up 19% of its population. While not as dramatic as the Gulf nations, Gabon's inclusion underscores Africa's internal migration dynamics, particularly among regional neighbors. Still on immigration, let's look at immigrants' population in Africa. In Africa, immigration patterns reveal striking contrasts across the continent. Gabon, a small Central African nation, leads, with immigration accounting for 18.7% of its population, a testament to its oil wealth and economic pool. It is closely followed by Equatorial Guinea and Djibouti, both leveraging natural resources and strategic geography to attract labor. Libya, despite its political instability, remains high on the list due to historical migration routes. The data also points to a subtle regional trend, with southern African countries like South Africa, Botswana, and Namibia hosting modest but notable shares of immigrants. Overall, while Africa's immigrant population remains relatively low in global comparison, key economies within the continent are emerging as quiet hubs of cross-border labor movements. And now we'll go on another break, and when we're back, we'll look at some global economic standings and the possibilities that are taking place. Most importantly, what the Bank of Japan Deputy Governor is saying. We'll find out after now. Don't go anywhere. Welcome back. It is World Economy, and my name is Bladukim. And now to Japan. The Bank of Japan Deputy Governor Shinichi Uchida has signaled caution on further rate hikes, citing extremely high uncertainty surrounding U.S. trade policy and its global economic impact. His remarks followed U.S. President Trump's announcement of a trade deal with Japan that includes a 15% tariff on Japanese exports, including autos. Speaking in Kushi, Uchida said the central bank would raise rates if economic and inflation trends align with its projection, but warned that U.S. tariff could undermine Japan's wage growth and stall tightening. Uchida also pointed to rising domestic political uncertainty following the ruling Liberal Democratic Party's upper house election setback as another factor weighing on policy decisions. While policymakers raised rates by 25 basis points in January, it has since refrained from signaling further hikes despite persistent inflation failing expectations in Japan. And now to Nigeria, as Nigeria GDP grows by 3.13% in the first quarter of 2025. Nigeria's economy expanded by 3.13% year-on-year in the first quarter of 2025, accelerating from a 2.27% in the same period last year. The services sector remained the key growth engine, rising 4.33% and contributing 57.5% to GDP. Within services, telecommunications and information services posted a robust 7.40% expansion, accounting for 10.59% of overall output. The industrial sector gained further traction, rising 3.42%. However, a growth in the oil sector moderated to 1.87%. Meanwhile, the manufacturing sector recorded a modest pickup of 1.69%, contributing 9.62% to GDP. Key drivers included food, beverage and tobacco, chemical and pharmaceutical products, and cements. Moreover, the agriculture sector edged up 0.07%, rebounding from a 1.79% contraction in the first quarter of 2024. Still on economic indices, as South Africa inflation rises to 4-month high. South Africa's annual inflation rate rose to 3% in June 2025, the highest in 4 months, from 2.8% in each of the previous 2 months. This was driven by higher prices for food and non-alcoholic beverages, alcoholic beverages and tobacco, health, information and communication, recreation, sports and culture, restaurants and accommodation services, and personal care and miscellaneous services. On the other hand, price growth slowed for housing and utilities and furnishing, household equipment and maintenance. Transport costs also continued to drop, but at softer pace. And now let's look at the chart indicating South Africa's inflation rates. Inflation in South Africa has been on the decline, but many possibilities that could come with it. First, as of last year, June, inflation in South Africa stood at 5.1%, dropping to 4.6% in July and continuous dropping in that direction to October, where it was 2.8%. Began to rise slowly to a peak of 3.2% by February, and then a slowdown again and a peak and back to 3% in June, indicating the quality of the rand improving in the market, as well as the cost of commodities being a bit stable in South Africa, despite a recent slight increase in inflation rates. And now to the financial markets as euro remained close to 4-year high amid renewed trade optimism. The euro traded above $1.17, remaining close to its highest level since August 2021 as optimism grew over a potential trade agreement between the US and the European Union following the announcement of a US-Japan deal. Meanwhile, markets are focused on Thursday's European Central Bank policy decision and the release of flash PMI, the data from the Eurozone largest economies. The ECB is widely expected to keep interest rate unchanged after 8 consecutive cuts, as policymakers weigh the potential impact of steeper than expected US tariffs and a stronger euro on growth and inflation. Money markets are fully pricing in 25 basis point rate cuts by December, with roughly a 50% chance of its coming as early as September. And now let's conclude with FX updates. Looking at the top currency gainers this afternoon. Top currency gainers are New Zealand dollar gaining 0.56%, Australian dollar also gaining 0.46%, a Swedish krona gaining 0.27%, and British pound 0.15%. The dollar index also gaining 0.06%. The biggest losers this afternoon are Japanese yen, a negative 0.03% depreciation, and the euro, a negative 0.04% depreciation. Now quickly, let's go to the forex market and see what the price level is for the currencies this afternoon. The forex market indicates the euro against the US dollar at 1.17 point mark, while a slight decline in this one, negative 0.07%. The pound are gaining just slightly over the US dollar, 0.13%, and the Aussie gaining 0.68% over the US dollar. New Zealand dollar gaining, but the US dollar suffering against the Japanese yen, and the Chinese yuan, and the Swiss franc. Let's look at further markets in this one. While the US dollar against the Canadian dollar, the US dollar falling against the Canadian dollar a negative 0.16%, and against the Mexican peso gaining 0.04% against the peso, against the Indian rupee gaining 0.07%, against the Brazilian real falling a negative 0.01%, and against the Russian ruble falling negative 0.43%, and even further. Well, here we draw the curtain in today's edition of A World Economy. Thank you for being a part of it. My name is Blyden Kim, and thank you for watching.